We warned you things would be moving in the last hour of trading, and markets are cooling right now. Literally in the last half an hour, the Dow up as high as 243 points. That was exactly at 2:51 p.m. Eastern time. But look at that. We've already lost over 300 points just in the last 40 minutes alone. So you can see on your screen right now, just falling lower to down a 65 points right now on the Dow. But let's move on to Tesla, because we love talking about Elon Musk. Leading the NASDAQ right now as the company names 2 independent board members as part of an SEC settlement. You've got Oracle co-founder Larry Ellison and Walgreen Boots Alliance's global head of human resources, Kathleen Wilson Thompson. They both have joined the board today. Let's bring in Ed Kim. He is the AutoPacific VP of Industry Analysis. Thank you, Ed, for joining us today. I want to start with the...
Thanks for having me.
I want to start with the news of the day with Elon Musk. I know he just tweeted out about how happy he is, but you've got Ellison, who's buddies, isn't he? He's quite tight with Elon Musk, and he's invested quite a bit in this company. How can these two rein in Musk's Twitter's, comments and the things that he's doing? Do you think that they can actually have control over him?
Well, hopefully. Of course, the SEC deal involved getting 2 independent board members, and it's questionable just how independent Ellison really is, given that he does have a personal relationship with Elon, and he does describe him as a close friend. Perhaps, if I'm being optimistic, perhaps that close friendship can work to the company's favor. Perhaps he'll be able to offer sound advice, help keep him under control, which is something that really, even barring the SEC ruling or that deal, it's something that the company has really needed. Now the other new board member, she is independent, and with her experience in HR, that can potentially present some solutions, hopefully, to ongoing HR issues that have been plaguing Tesla for quite some time now.
I want to completely switch gears right now and just talk about trade and the year the auto industry has had. You've got NAFTA 2.0, USMCA, whatever you want to call it, in the works, signed, still cranking out some details, or actually getting some more signatures from Mexico and Canada. And then you've got the Chinese reversal on U.S. auto import tariffs. So given those two positives for the auto sector, what do you think is going to happen in 2019? Are we going to see some firm deals now?
Well, I certainly hope so. 2018 was such a year of uncertainty, and it really threw the auto industry really for a loop. The trade war really impacted so many automakers, including the domestic ones, in very negative ways, raising costs because of tariffs, even for vehicles that are manufactured domestically in the U.S. Since rising materials costs, raw materials, that certainly didn't help automakers. So hopefully we'll get some more certainty this year. We've seen a lot of automakers having to very rapidly try and switch gears, switch production locations, things like that, in order to adapt to these very quickly changing realities. Hopefully we'll get some more focus in 2019. I think, if I'm being optimistic, things do appear to be headed in a positive direction towards some sort of resolutions, and hopefully that'll bring some stability and hopefully more profitability to all the automakers involved.
You just spoke about some of these automakers that are making changes right now, and you're remaining optimistic, but you have GM and the president really upset about the fact that GM has, I guess, quite a few layoffs and affecting a lot of Americans, but GM is focusing on the future. What do you think of that initiative? Is it a win for them because they're focusing on electric vehicles and autonomous driving?
Right. Now, of course, the layoffs have been have represented really bad press for General Motors. The flip side of that is that GM, under Mary Barra's leadership, has really been showing and demonstrating for the last few years a real willingness and ability to look past the next quarter, which is something that GM historically has had a lot of trouble doing. So this new GM under Mary Barra is very future focused. The company is really working very hard to see and cement their place in this future mobility of the that's coming. Everything from autonomy to electrification. These are things that are coming no matter what, tariffs or not. And the company is making some big changes to fit those future realities. I can't stress to you enough just how much of a behavior change this is for GM to make very painful decisions now to ensure that they really have a place in tomorrow's future.
Well, at $33 right now, is it one of your picks for 2019?
Well, I guess I'm more optimistic about General Motors than I am, say, for Ford, who the difference between GM and Ford, in my head, is that GM has really laid out a very clear roadmap of where they want to be in the future. Ford is talking about the same things, electrification and autonomy, but they haven't really been able to communicate what their future focus is going to be on, how they're going to get there in the same way that GM has. And I think to the investor community, the more forthcoming plans laid out by GM, I think, are sound better than what Ford has shown so far.
Ed, on our screen right now, we're showing some of the picks, and Tesla was up there. But is there anything that you're concerned about that it maybe isn't well positioned going into the new year that we should be looking at, or playing it safe?
Sure. I think automakers that have product portfolios that are too focused on passenger cars, particularly sedans, are going to be challenged. The last few years, we've seen this meteoric rise in sales of light trucks, and that, of course, includes those red-hot crossover SUVs. Automakers that aren't focusing, whose product portfolios aren't as focused on SUVs and more focused on sedans, are going to be very challenged in 2019. Now, I think that's a dynamic that isn't so much a problem for the American and the European automakers, but for some of the Asian automakers who are, sedans remain very, very popular in many parts of Asia. And so for those automakers, for those Asian automakers who are too focused on sedans, not focused enough on SUVs, they will find challenges in 2019. Also, I think that Chinese automakers, there are a lot of Chinese automakers that have announced intentions to eventually sell vehicles in the U.S. market. I think depending on how trade negotiations continue this year, the business cases for these Chinese automakers is really going to be made or broken, depending on what happens there.
But we just showed on the screen your vulnerabilities, but there's no mention really of Lyft or Uber. I know that they're talking about IPOs in 2019. Isn't that a concern for a lot of these GM, Ford that have been around for decades and decades? You've got the new guys, the car sharing, and all the younger people using them. Isn't that a huge threat?
Well, the really proactive automakers, and I would definitely include GM in that crowd, have really been very aggressively been getting into Silicon Valley. GM has a strong presence in Silicon Valley through their Cruise automation unit, which is symbolically based in San Francisco, right in the heart of the tech community. And Ford is doing some of the same. I think the most proactive automakers are the ones that are really figuring out how to not just survive, but how to really leverage those relationships with Silicon Valley to ensure that that these legacy that they are a big part of the future, and Silicon Valley is certainly going to be a big part of that, and those that work with them are going to be the ones that thrive.